right, good morning, everybody. Should be a good week. We've got good movement in markets. Not really anything too terribly exciting in terms of immediate narrative today, unfortunately, in my opinion. Um, I know the crude break is nice here. Best trade locations were early though, so we'll see what we can get in the session though. S&P, nothing terribly exciting with it right now, or at least no fantastic clarity. So let's go to the charts and take a look. Crude offering some really great early morning imbalance pullbacks, which got us in with, day one break of our recent 3-day balance. So, but now it's a gap up situation. But we'll look for continuation. We still have upside targets, namely on the monthly, right? Yearly is a non-factor. Quarterly is choppy, but maintaining a rotational now. So we're generally bullish from this lower zone. I just don't have anything drawn there. And then the monthly has been unable to get below its VWAP, and so we could easily see the monthly spike back up into this general area between its prior value and developing value. So we'll look for a continuation play today to get on board with that. Other than that, I know this is a lot to look at, so maybe this looks a little bit better. I'm trying to show a lot of things for the stream so we can discuss it. So let's talk about the S&P. The yearly is probably the most interesting thing going right now on for the S&P, and that's is this just gonna all be just a deeper wick into developing value, or is this going to be a move up here that finds some sellers? I think it was already trying to do that if we go ahead and step down to the quarterly. And that's kind of failed. That's what's happened here recently. The quarterly was trying to say, okay, yeah, you can't get back through VWAP. And there's a structural view to that as well. If you start to look at the volume profile that's developing for this quarter, you see some low volume right into here. That's because it's these two swing lows back where this swing high was, back where these people supported. And so now you might see some resistance there, right? But as of this moment, we are rocketing through there. I've seen crazier things than if we were to somehow get back below this 3,300 level. So it's a nice key figure there. So we'll see, but that's not my expectation for us to just wick back through there. But if that does happen, we know, sellers activated from this general area. That was just a big stop run through, and the yearly showing us that it wants to kind of stay rotational. So we'll keep an eye on that. Again, open space as we drop down to the monthly. Not a whole lot going on here. Yes, are we attempting to have a shift? Yes, we are. And what is that attempt? It's an attempt to get back into and negate the entire breakout pullback we'd been seeing of last month's value. So this, essentially what we've seen in the overnight session has been a move back into that area. The imbalance down has failed, but it's messy, right? because think about it. Think about it in advance. Let's kind of hate not having a drawing tool, but in general, just follow my cursor. If let's focus on developing value. Well, we're going to focus on both. If we were to get a nice extreme fade from back down into this area, right? And this is an important area. We'll probably leave it marked for a prep. This is dissonant with the prior value. If we get a rejection and start working our way down here, we're going to have had a bearish reaction from prior value to be setting up for a bullish reaction. So this whole zone here has the potential to be messy, choppy. We'll see what the shorter time frames give us as those unfold. There is enough room between 3270 and 3311 to take trades. So it's not like we're just going to be totally handcuffed. But that's something I'm already thinking about, is the dissonance between those as that plays out. And the weekly, pretty clear picture there. Overnight session, just driving directly from, a bit of a hold right here on prior value. And we've just driven higher. That's all that's happened there. So that's a place to look at if we start to revisit. But then again, if we do start coming back down into this area, we have more important inflections beyond, to above and below this weekly area. So like I said, not too excited about the ES right now in terms of clarity of narrative and something clear in terms of line in the sand to lean on. And look, you think I'd love to come in here Monday morning and say, I've got it figured out. Here's exactly what the deal is. Here's remember, the goal is not to achieve clarity every single day. The goal is to know when there is and when there isn't. And in my opinion, I don't have a lot of clarity right now in the S&P. I know what it's doing, but in terms of trade location, lines in the sand, confluence, I don't have it. Structurally, the S&P has given us much nicer structure as of late. So it's been really nice to kind of work off these levels. They've worked really nicely. Now it's a reversion back into this area of balance. But as we know, it's more recently we've been value migration lower, and now this is rip roaring beyond those levels. So Friday gave us the breakout pullback here, the fast trend, return pullback into here, destination into there, and the overnight session. I'm not even exactly sure how it's reacted to those levels. Let's look at the prep chart. It'll show us. Which one is that? All right, that's the destination one we got to. So then it holds that, and I actually took some longs from here and got out right here. Just said, you know what, it's not worth it. I got to go to bed. But yeah, that would have been nice. So then it comes up, kind of compresses a little bit into this, right? Pops through. And so now we're just kind of in the middle of this open space again. Nothing to really lean on as of right now. If we come back and test this prior composite level here, especially as this developing value area high keeps creeping up, that's going to put us well into developing value, which is not a great intraday trade location. So looks like we just don't have a lot going on today. So probably going to be a boring, patient type day. from me, but we'll see. Still got 20 minutes till the open. Okay, so you guys let me know. Does does this uh, does this view work okay? Or I could do a just a more close-up shot of, let's say, the intraday DVA and maybe prep chart, something like that. Um, so you guys speak up in the All Things Live Nadro room and let me know if you'd like to switch it up or something like that. Probably the answer is if you have a large pixel monitor, then this works good for you. And if you don't, then it's probably really tiny, pretty tough. But most people these days have. Okay, great. This is my preference, obviously, because this allows us to kind of mention a reference and um, see it and refer to it and see the confluence and stuff like that. So it'll be good. Yeah, we did not cover any volume profile type stuff, but um, it's the same as market profile. You look at the distributions, just because there's not a um, technical value area line, you just look more at the edge um, of those high volume clusters and whatnot, and use the laws of market dynamics as it accepts inside or outside of those things. It's all the same concept. So as you can see on my long-term VWAP charts, I do have um, a volume profile for each of those periodicities. My most important thing when I do look at those, just FYI, is not the current ones that you can kind of see here. It's when I'm doing prep type work, and these are all slow moving charts. It's not like the last quarter's volume profile is going to change on us over a 3-month period, right? So this profile is what I care about during the current quarter. Prior value. And someone will say, well, this is really significant, and in fact, I referred to it on the video and whatnot. Well, guess what? We will see all of this data in last month's data, in last week's. We will see it in those. So just because you don't use it here doesn't mean that that literal same information doesn't get used elsewhere. Yeah, Ramen, I'm guessing that you have a smaller monitor. And that's going to be the downside. It's going to look really compressed and whatnot on your normal standard size monitors, I believe. You don't need to see the numbers though. That's not going to be important, you know? It's the visual rhythm and movement and seeing when I'm doing what. It doesn't matter what the numbers are, so I wouldn't worry about it. All right, so let's get our prep done for the S&P today. So yes, yearly developing value area high could be a reference, but just given it doesn't feel right with rhythm and what's going on, it feels like this very well could be just a, like I've been saying the whole time, you know, like on one hand, yes, on a micro basis, that's why I called it micro, we could be, you know, I remember the day we bounced, right? From the minus twos, we pushed right up into yearly developing value area high. That's very, very micro. That's not a real rhythm, real acceptance, real condition shift type thing. It's just the reference is there and we immediately kind of went there short term. So, you know, if you look at this from any basic point of view, it's a big rotation up, big rotation down here, and you know, we could see another rotation. So just to say that we're now pushing up into here and that's really bearish, that's just not accurate. It very well could be. We do see micro, like for example, when we pushed all the way up here, I would have said the same thing. I would have said this imbalance pullback, right, is very, very micro. It's not, you know, any type of nice pullback that we would really lean bullish off this in trade. But look what happened. You end up putting a 1, 2, 3, 4, 5, 6 day balance in here, and then you break and go. You can use all that information together. We don't have a 6 day balance or anything here. In fact, we've left a couple day balances below. So the yearly is not something I'm going to put a line on my chart and say, this is an important reference, even though I think it's one of the most important, you know, inflections that we need to monitor over the coming week here. So we'll see how it unfolds, but it's not going to be a line in the sand. Quarterly, flat VWAP, rotational, literally nothing for us to lean on or look at here. You know, could we consider this a kind of a destination if we're rejecting the lower end, running up to towards the high? Yes, absolutely. VWAP had previously held us, and we're pushing through that. I get it, but line in the sand, strong bias there. We're leaning bullish, but nothing to use. Monthly, which we talked about, we'll leave a bullish line in the sand here, right? That is a recent condition shift. And so if we did get that, even though there's going to be dissonance, and I probably do want to have this level monthly prior value on the chart, even though it creates a little bit of messiness up here. I still want to have it because I think it's important. And excuse me, with all the throat and maybe sneezes and stuff like that, I seem to be having some fall allergies, which is atypical for me, but whatever. You know, one thing that could happen today is that we could see kind of a weaker looking pullback. The sellers don't have a ton. and we might hold. If this market's going to be really strong and just keep kind of ripping higher, we could see a return pullback of monthly prior value. Do I want to put it as a bullish line in the sand? Probably not, just because I think that's expecting a lot from that market. So we're not going to place that high of an expectation on it. But between us, we'll know. Let's see. And that would work nicely in terms of as I just look at kind of across charts. I'm looking at the monthly. That's right into where kind of quarterly VWAP is. Would make sense for kind of a micro test of that if we are going to keep ripping higher. And that would be into this space here on our structural chart. So this, again, I wish I could kind of draw for you, but we have structure here, we have structure here, and this is kind of a low volume area in between. So I see buying this level just as good as buying 33.20 to the tick, right? It's the low volume area in between those two. So we'll keep that in mind. You know what? I'm gonna make it bullish, just so I don't forget. I don't want to forget that it's kind of important, and it's essentially one of my hypos, right? For me these days, I don't normally say, okay, hypo 1 is this, hypo 2 is this. It's more of kind of a free flowing thing based on multiple if-then scenarios. I don't necessarily list them out like that, but I do think it's a good practice, a very good practice for you guys, and that's why sometimes you'll see my preps take that form. Other than that, do I see us getting up here today? I mean, how far away is that? 34.30s from 33.30, so that'd be a rip roar kind of day. It's not insane, but it would be a lot. So don't really expect that, but in general, that's if we can hold this area and or this area, that's the general expectation. To the weekly. We've pretty much got all the information we need from the weekly right now. It's Monday. We can't use developing value. And we've got prior value marked here. So I think we're good to go. Let me take some screenshots and get some stuff done. I'll be right back. Yep, we're going to talk order flow today. Week 6, final week, about order flow. You know, it's a nice, grind, kind of flaggy type pullback back into developing value here. We will pass on that. The opens in the crude really taking a dive. The opens in the S&P have been very kind of quote unquote wild, not crazy wild, but very much back and forth within this, several handle, right? Very whippy. That's what the S&P opens as of late have been. So, we'll see if crude is going to accept back into this main line in the sand for us today. Lot of buying off the open. Bought some crude here. VWAP confluent with the day one breakout pullback. Off our immediate CVA. pretty small, tight risk on this play, given VWAP to lean on, and the way that double bottom here can provide kind of some price action resistance. So essentially this becomes a potential spring pattern, if you will. So we'll need to see it kind of pop back up through there for this trade to remain good. S&P pushing new highs. So crude really stalling here rather than seeing that wick of VWAP and continued upward momentum. So we'll stand aside. S&P with an even sharper reversal here. Playing a little momentum. Not a standard play here. It's right at the failure of the imbalance. You know, it makes sense on multiple time frames. We need to see something of a pullback in the S&P. Just a scalp here. It's going to scratch out. Yeah, crude never able to put in any kind of a bounce there. Just stall, stall, stall. Now it's attempting to press those lows. still think the S&P is pretty bearish here with this sharp reversal, but I did think it needs to maybe drift higher a little bit before it might continue. Absolutely flooding here. So you got to think one scenario is for crude to just finish this drop here to the other side of developing value. Um, you know, it spent 15 minutes just going sideways in a tight range right at VWAP. It's right at the edge of our CVA structure, and just not able to put a bounce together. So you would think they could kind of zip through. Thought about another advanced kind of cheeky little short right there in the S&P, but we'll stick with our selectivity. You know, if we were to go down to a much smaller time frame, say 2500 volume, you'll kind of see what I was talking about with initially a fairly kind of going short with the momentum here, and then it stalled, it starts to lift. This is where I scratch. And so thinking about the short right here, it's just an extreme fade, but it's all on a short time frame. I can see those time frames on a 3-minute chart. I don't need to pull up this time frame to see that. There you go, crude with the zip cross, composite point of control, developing value low. So like I was saying, crude just not going to give us a DVA. Even if we do get the return pullback of the CVA, we're looking at trying to trade from VWAP again. But, fresh condition shift, failed breakout, immediate balance, we'll consider it. It'll depend on if we get kind of a weaker looking pullback higher. These levels on this chart book for the ES have not been updated. So, just to talk through some, I guess, basics and whatnot. Okay, so, crude is at developing value low, and TPO point of control, or composite point of control. Is this an opportunity for an extreme fade? No, it's not. Bearish contextual shift. Again, we could possibly stalk some type of return pullback of the CVA structure, weekly prior values up here, 40, 30s. I don't have that marked because I wanted to focus on the CVA structure. And likely destination still down here lower, not achieved yet. But all that's pretty small fry stuff. One thing that could develop for crude is that we could get the ultimate, breakout pullback below the composite structure. That would be a nice opportunity, and that we would likely be imbalanced down at that point in time. So it could line up for a trade location for us. Perhaps the best scenario we've walked through yet, if that shakes out. Earlier, just again sharing more with the S&P, the little scalp short I put on. We talked about, I'm pretty sure in real time I was saying, could put that back on. I'm just going to back off and be more selective. And, that's a good decision. Even, size-wise, being smaller for a scalp and things like that. And in general, I'm trading smaller today just because it's a different scenario for me being on a live stream and things like that. So I'm just kind of taking things easy. But yeah, if that was an A+ opportunity and you heard me say something like, well, I'm not going to take it here or whatever, and came up with some excuse, that's an error. But in this case, this is nowhere near, some kind of A+ opportunity. It was like I said, a cheeky little scalp with a pickup in the tape and a shift in momentum and a failure for that market to stay imbalanced up. Nothing to lean on there except knowing that probably due for some type of a pullback to see if we're going to hold some of the fast upward general medium-term momentum in this market that we were talking about. Is monthly prior value going to hold us if we pull back there, right? Is this LVN, this old composite structure going to hold? Things like that. So a pullback is anticipated or probable. And so all of a sudden I saw a shift in the tape, an opportunity to get on board with some momentum. I scratched it out, for a one tick gain or, something like that. Or one tick loss. I have no idea. Somewhere around where I got in. And I just didn't feel the re-entry was warranted. And that's something I think is very important for a lot of students. They feel like a bunch of re-entries are warranted all over the place when there's not a really good setup. And then a lot of times I see when there is a really good setup, they're not aggressive enough. They should be re-entering. So that could be a good takeaway from this morning's session, if nothing else. Nothing for me to do at the moment. I'm not going to take the VWAP trade location in the S&P. I know it is into a neutral area, composite structure and whatnot, but I'd prefer to wait for some better setups. I might throw up an RTH VWAP here and start monitoring that, just because the ETH is so wide. But I'm gonna grab some more coffee. Got a couple. I had two 32-inch 2K monitors, and so I've now added, and then I had a couple 20 something inch monitors above that. And so now I have four 32-inch monitors, and the two new ones are 4K. And quite frankly, so far, I don't like it. Everything is so small, which I know is great. I mean, I would never be able to pack in my almost like my entire chart book onto a single monitor like this. Um, but yeah, other than that, just general, like you pull something up, whether it's a browser or different things, it's just really, really small. So I don't know. I'm adjusting, but so far not loving it. This is one of the I feel bad, but this is one of the least active opportunity morning sessions that I've had in a while for me. But we got a whole week together. We'll have better days. Right. Now, the weak pullback in crude has my interest. It was a bullish line in the sand. This is immediately recent type stuff. So we talked about didn't like the VWAP trade location unless we got kind of a weak methodical pullback here. So kind of stalking short here in crude. Yeah, guys, sitting on your hands and not chopping yourself up all over the place is maybe more important than than knowing where the good setups are. If at the very least, it's as equally important. And so maybe I shouldn't apologize for the slow day. It's almost like I almost am coming from an attitude of need to show you guys things, need to be entertained in some way, and maybe Blue Swan, maybe that's a good perspective for me to realize that you guys need to see this grind, and just as much as anything else. So, but we are stalking short here in crude. Never love trading from the middle of DVA. Never love that, but contextually we're set up. It is perfectly aligned with VWAP, so and the pullback is methodical. I'd love to see a wick, some type of capitulation, maybe into VWAP, because I do feel like if the momentum shifts and I get in, I'm susceptible to that, but that's okay. All right, so we'll get in a little bit there. probably will scratch if we're not getting momentum, which so far we're not. Look for the actual wick of VWAP. Kind of missed the perfect scratch out there, so I'm just kind of paused here in limbo, seeing if it continues to press or if it drops back down. So far, drop back down. So what is this trade? It's a return pullback of our 3 or 4 day CVA. Trade location is VWAP. Scratched for now. Still working this overall trade. It tried to turn and the buyers have control short term. I'm currently not using Heikin Ashi at all for my charts. But a month from now, I might have it back on. For years, I'll put it on, I'll not have it. Just kind of back and forth with it. Really wish the buyers would get a better upside wick in. Might be forced to get back in here if they drop it and still be vulnerable to the upside wick. In fact, even more vulnerable. One thing you should note with crude here is, just no tempo to this market. Very tick up, wait a while, tick down. And then all of a sudden, orders will fly in, and it could be the end of the volatility, or it could be the start of something big. They almost look exactly alike. So not ideal here in crude. S&P is stabilizing, finding buyers around the first neutral structural area it's gotten to. All right, crude finally pressing fully into VWAP here. We don't want to see the buyers do too much more than they've done here, else that's just too much strength. Need to see the sellers slam this back pretty quickly. Yeah, Stephen, I don't agree with using those type of distributions or anything, so I couldn't comment on them overlapping or anything like that. A lot of times your value areas are pretty worthless when you're using stuff like that. And this, yeah. So yeah, crude trade. No no trade given. Too far through. Looks like not only is today a low opportunity day, it may be messy with our important references that we do inflect with. So, but we could talk about that sequence there, right? How many people in the community would have the general thought of return um, pullback of the crude oil CVA? Okay, I'm going to take a CVA. I'm going to take a VWAP trade location, things like that. How many of you would lose 1R, a full 1R on that sequence? 2R, right? Who knows? Um, Again, with me, it was, I can't remember. It was a scratch for sure. Might have even made a tick or two. I can't remember. And there was no reentry. I never got right? I never got that. Never got a signal to do so. So putting yourself in position to make 3 or 4 R while really never losing much, this is, it may seem like a boring, just a couple scratches kind of day, but I'm putting in myself in position to crush it. you know, you get one trade that just works for you, you make a whole lot more than what we've done today in terms of lose anything or whatnot. Buyers in the S&P fairly relentless. It was actually a nice little sequence off the lows. All right, so we're having more discussion today because there's so many periods of nothing to do for me. But normally this will be a stream, a one-sided stream. It's not going to be a live Q&A. But we have the time. We're able to today, so we can. What about the 955 return pullback in the S&P? Yeah, I mean, was I not narrating that the whole time? We were talking about it was down into our first structural area, stabilizing around VWAP. It just wasn't a trade that I was interested in. There was a pretty sharp shift in momentum here. The imbalance had kind of failed, and I thought that we could see at least more, even into this area of downside than we were seeing at that time. So I wasn't interested in pulling the trigger there. I think as Edward in the chat referred to, given where we are, just look at this chart, right? The weekly. We'll get some more data in here. A lot of times, given this large move up that we've seen, you're not just going to have such a small pullback and just keep going. A lot of times, it's going to start to pull back and maybe drift up a little bit and continue to pull back because we just didn't have fantastic structure to lean on. We've got newer structural areas below, right? And I was looking for a deeper, remember pre-market prep? I circled this, looking for something a little deeper here. Just didn't get it. And another question around framework for determining when to use RTH versus ETH developing value. So as you saw, I started an RTH developing value on the S&P chart here. The short answer is you could always use RTH and be just fine. You could always use ETH and be just fine. You could use both and maybe be an enhanced trader, or you could use both and possibly just find more ways to trade worse. That's the real danger with using RTH and ETH, is that now all of a sudden you're getting twice as many trades that the DVA is saying, hey, this could be opportunity. So it's twice as hard to just stick with narrative and wait for the best opportunities and things like that. So that's why you guys doing this initial live NADRO type course, I'm not going to put that on you. That's why I didn't even go over this topic really, is because I think it's too difficult for most. I think ETH is what I lean on 90% of the time. And, other people in the student community, you'll see, have different opinions on that, and they lean more on RTH or whatever. There's no magic to either one of them. One is not going to be better. Using both at an advanced level where you're still being selective enough and smart enough about what you're doing is the ultimate best solution, I think, but it's not necessary. ETH is really the main staple for me, and that's why that's what I teach you in the course. Look, if you're keeping it simple in terms of, maybe you're more focused on CVA structure, and you're not, I'm applying a couple more higher time frame, almost rhythm type filters and some advanced stuff for me not taking that trade. So if you're one of your hypos today was 3320's general area, if I get a long on the return pullback of this older CVA in the S&P, and that lined up with VWAP for you and you felt comfortable taking it, it's a good trade, right? But as you guys saw from me, I was looking for something a little more. It's all good. All right, I know there's more questions, but I can't keep taking all the questions right now. Maybe in a bit. Should we be stalking an extreme fade short in crude oil? And the answer should be no. Right? Prep chart for crude. We just took a foray into, well, you know, what were my trades? I first tried this, and then this, right? And so, should we be short from here? No. You know, perhaps we'll get another stinking middle of a flat DVA trade location to consider a long. Now, if crude goes imbalanced up, that's a worthwhile scenario to consider. And the same for the S&P here. It's showing us that, look, we're just continuing onwards. Especially if we could get it somewhere in here before it reaches the upper end of the other side of the CVA structure. That would be a nice opportunity. All right, pulling back in. It's pulling back in pretty sharply. The selling is not scary, but it's happening in fast motion here. Go to a volume-based chart. Get a little more granular, because this might happen quickly. Not going to take this momentum shift. Experience tells me that that's just too quick. You know, needs to come back and actually test into kind of developing value a little better. So if it just goes, then it just goes. You do hate to see it get this high back towards the high now, because now it's kind of a different dynamic. If it pulls back and we start stalking the trade, now all of a sudden, rather than feeling as comfortable with direct momentum, what's going to be happening, right? If we start to pull back from here, well, now we got to consider that, because it's going to turn into more of a complex pullback, choppier, more bar-to-bar overlap on a higher time frame than this. This is pretty clean trading here today. interested at what happens at this swing low point here when we start to trade below it. That's going to be the point at which we consider a fairly aggressive entry. Still not, it's not going to be great rhythm. If you look in the top right corner, you see that 3-minute chart. Not much of a pullback here. So it's a little bit compromised in terms of rhythm. That's important. Just because I drop down to this small volume-based time frame and get a decent rhythm there, I'm really liking the 3-minute rhythm lately. It's more of a medium-term, bigger picture, quote unquote, right? Bigger picture. A lot of people would get a good laugh out of a 3-minute chart being a bigger picture. Check on crude real quick. Just rotational. Not really opportunity there yet. Could be competitive down here. Stop run pretty much done. Tried to turn, but didn't really. right, so we took full stop there, but we're stalking re-entry actively. It was a pretty aggressive entry there, but that's what the plan was. That seems to be working. Take off 20% there. Keep in mind, the substantial momentum shift has not occurred. Upper right corner, 3-minute chart. We have not broken that little trend line, if you will, across the top of those bars. This trade is nowhere near in any form of clear. That looks really bad here. Micro kind of return pullback into DVA. Probably going to have to temporarily scratch. You hate to see it. Just peeled off another 20%. And we're flat. Okay, no, only 11 contracts down at the low there. Nothing too scary. It was potentially going to drop further. We'll see what this little push can accomplish, but the trade is still on. Just very actively managing risk. We're just still within a complex, multi-legged pullback down here. Three-minute chart starting to look better in terms of the length, the duration of the overall pullback. As we talked about earlier, it was pretty soon. Well, that's unfortunate. Would have been a little entry there we just missed. Might look at chasing a little higher here based on the 3-minute cracking above those recent 2 candle highs. It's going to put us in an awkward position though. Again, sellers from developing value area high on a micro basis. Got to stand aside. So sellers now putting something together, as you can see, the things picking up there. Let's check on crude. Coming back into our line in the sand, 40-20 area for that VWAP trade location. Not a big fan. Couple of attempts, couple of aggressive attempts within a, medium term choppier pullback here. So I'm aware of that. I'm pumping the brakes on the aggressive entries, and we'll look for more of a substantial shift in momentum before we get involved with this S&P pullback again, if at all. might be interested in a small wick of 32. I understand we're starting to push and hold on a micro basis into developing value, so you have to be very careful here. That's just my dog slinging around his toy. Well, there's your answer is in terms of stalking that that little thing. Not going to happen. VWAP trade location. Again, just like before, still don't love it. Would prefer to see something lower. Maybe we get a really true rotational type day and we find something at developing value low. Now look, I'm fully aware that this is a pretty decent looking rhythm pullback with the S&P and whatnot, but at this point, think about the premise that we were going for. It was an imbalanced pullback, and at this point, that is long gone. So just because we might find a decent rhythm turning point here doesn't mean it's a trade for us with our filters and our framework. Buyers showing some life here in the S&P. At this point, it is a pretty rotational day. Upward skew, unable to trade below ETH VWAP, obviously. But when you just look, just focus on this for a moment, right? Rotational within an area of prior established balance. Currently, is this a trade location? No, it's not. both S&P and crude kind of struggling to put in an up rotation so far. Not really significant, both of them middle of DVA. Crude at more of an important reference, but not offering any kind of even a VWAP trade location or anything. Well, guys, I guess that's going to be it. I don't foresee any any major opportunities anytime soon in either of these markets. Today, one of those days where not a lot of clarity on the narrative coming in, and then intraday condition changes, not holding rotational, not holding an attempt to get imbalanced. So a down day, probably down 1.5, 2R on the session all in. But we'll see. The volatility has been really good. Something could open up in the afternoon, but right now in these markets, nothing really to lean on. We'll see if we get some kind of imbalance that forms, and maybe you never know when a news catalyst is going to hit, things like that. But nothing, stalking nothing for the foreseeable future at this moment. All right, just another day in the life here, showing a bit of a grind day with not much going on. We'll see y'all in the morning, and in fact, we'll see y'all this afternoon.